The U.S. jobs market, a roller coaster ride in March 2025. March 2025 delivered a surprising twist to the U.S. jobs market, defying expectations and leaving economists scrambling to decipher the complex interplay of factors influencing employment. The headline figure, a robust addition of 228,000 jobs, far surpassed the anticipated 140,000, a stark contrast to February's revised 117,000 additions. This unexpected surge, however, came with a caveat. Unemployment edged up slightly to 4.2%. The picture painted is one of vibrant yet volatile economic activity, a testament to the resilience of the U.S. economy even amidst considerable political turbulence. The March figures stand in sharp relief to the trends observed throughout 2024 and the beginning of 2025. While the 12-month average stood at a respectable 167,000 jobs added per month, a downward trend had become apparent, with February's numbers reflecting this slowdown. The March data suggests a potential reversal, or at least a temporary pause in this decline. The private sector, mirroring this upward swing, saw 155,000 new jobs added according to ad payroll data, indicating a strong foundation for economic growth independent of government employment. However, beneath this seemingly positive headline, a storm of uncertainty brewed. The announcement of a radical new trade policy by the Trump administration the previous day cast a long shadow over the job market's performance. This policy, involving tariffs ranging from 10% to 50% on imports from all U.S. trading partners, promises to significantly reshape the economic landscape. The full implications of this bold move are yet to unfold, and economists caution that the impact on employment figures may not be fully apparent for several months. This uncertainty hangs heavy over the already complex picture, making definitive conclusions premature. Adding further complexity to the situation, March 2025 witnessed a significant spike in job cuts, reaching a staggering 275,240 according to Challenger, Gray, and Christmas, the third highest total since 1989. This represents a concerning 60% increase from February. The cuts, predominantly driven by the administration's self-proclaimed Department of Government Efficiency, highlight the human cost of sweeping policy changes. Several high-profile companies contributed to this surge in layoffs. Cleveland-Cliffs, a major steel producer and supplier, announced 1,200 job losses in Michigan and Minnesota, citing weakening demand in the automotive sector. Whirlpool shed 650 jobs at an Iowa manufacturing plant. Wolfspeed, a chip maker, cut 180 positions in North Carolina. Milgard Manufacturing's closure of a California factory resulted in 397 job losses slated for May 2025. SBS Technologies, an aerospace contractor, issued notices for the layoff of 251 Pennsylvania workers, also scheduled for May 2025. These large-scale layoffs paint a picture of economic contraction in specific sectors, contrasting sharply with the overall job growth figures. The disconnect between these trends highlights the uneven impact of the current economic climate and underscores the need for a nuanced understanding of the data. The high number of job cuts, particularly within manufacturing and government, raises serious questions about the long-term sustainability of current economic growth. The question remains whether the overall job growth can withstand the pressure of these substantial and strategic layoffs. The economic backdrop is further complicated by a significant dip in consumer confidence. March 2025 saw consumer confidence plunge to a 12-year low, a clear indication of growing pessimism among consumers. Economist Dean Baker attributes this decline to the anticipated or realized impact of higher import taxes, coupled with the reduction in federal employment and government contracts. This drop in consumer confidence adds another layer of uncertainty to the economic outlook, potentially foreshadowing further economic challenges in the coming months. Despite this bleak sentiment, Baker notes that many key labor market indicators, notably weekly unemployment insurance claims, have remained relatively stable, suggesting some degree of resilience within the labor market itself. In conclusion, The March 2025 jobs report presents a paradoxical picture. While headline numbers show substantial job growth, underlying factors paint a more complex and potentially concerning narrative. The massive increase in job cuts, coupled with plummeting consumer confidence and the looming uncertainty surrounding the new trade policy, create a volatile economic environment. The resilience of the U.S. economy is being tested, and the coming months will be crucial in determining whether the positive job growth can withstand the negative pressures building within the system. The full impact of the Trump administration's aggressive policies, both domestically and internationally, will undoubtedly continue to shape the employment landscape for the foreseeable future, making ongoing monitoring and analysis essential for a complete understanding of the evolving economic situation. The divergence between broad job growth and sector-specific contractions suggests a deeper economic story is unfolding, one that requires careful consideration of all contributing factors before drawing definitive conclusions. The near future will be pivotal in determining whether the initial positive job growth signals a lasting economic recovery or merely a temporary reprieve before more substantial challenges emerge.